If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's September 15, 2020. And today is Tuesday morning. So looking at the highlights of the day, gold breaks to the upper resistance level. An amazing rally for gold. But first, let's take a look at the various markets. So looking at today's economic events, nothing scheduled, but again, tomorrow we have FOMC coming out of the United States. That's an interest rate decision, a very major number coming out. So you do want to know what's coming out. But first, as we lead into that number, looking at the various markets, the euro trades to the upper range, while the GBP bounces off of support after that massive sell-off last week, mostly because of Brexit issues. Now, looking at the indices, the Nasdaq and the Dow Jones continue to rally before this FOMC number. And looking at the commodities, gold, as mentioned, trades to the higher range, while oil pretty much unchanged. And lastly, looking at the stocks, JP Morgan looks better and better. Every time I'm looking at it, it looks like it's going to break out on the upside. So let's take a look at the markets and see what we can expect from today's trading. So we're starting here with the Euro USD at a 4-hour chart. And clearly, it's rallying between these two parameters, the upper limit 1890-ish level and the lower limit 1811. We mentioned this yesterday, and it does look like it's going to continue taking it higher. All right, now this is my wedge formation. Let's clear that up a little bit so we could see it a little bit better. If you could see here, okay, we made this so far, this double top. Now, it does really need to break above that. First, to challenge this 1990-ish level. I'm not sure if we're going to do that. This may be a fake out right before the number, but it does look a little bit promising on the upside, okay? But this usually does happen right before a major number. We usually trade to a major resistance-ish area, and we're right there. But, you know, the number's not coming out until tomorrow, so we do have some time until that. Now, looking at the GBP USD, finally bouncing off that 28-ish level, about 50 to 60 pips above it. So this still has some room to go up on the outside as it's making that comeback from 133. Now looking at gold, beautiful little breakout we had here to 1967. It's selling off right here now, but altogether it did push that upper limit. Now this is that secondary resistance-ish level, okay? This 1967, if it doesn't break above it, it will retrace. So again, it's coming right before this major number. It's going to be interesting to see how this unfolds going into tomorrow. Now looking at the Dow Jones first, we're rallying above 28,000. Okay, that puts us back above, okay, our previous resistance-ish level, but it does need to follow through today, especially as the FOMC number is coming out the following day, tomorrow. Okay, so this does get affected by it, and you see that we did break that downwards trend line that we were forming. And that means that we are now consolidating, okay, between these two areas, between 28,000 and 27,400-ish level. So something to consider going into the next couple of weeks. Now, again, I can't emphasize this enough. It is an election year. Right now in September, we have 2 months until, you know, the November elections for the next president of the United States, whether it's going to be Joe Biden or Donald Trump. So that still is playing in front of us. I do expect the markets to continue to be very choppy and to be very volatile. And I do expect another 1,000-point retracement at some point, okay? I'm not sure if it's going to happen this week, next week, and the next week. You know, it's going to happen, though, because that's usually what happens going into an election year. Now, looking at the Nasdaq, pretty much tapering off at 11,326. Again, nothing really to write home about. We did bounce off of that level, 11,000, but the stocks are pretty much weak, okay? If we look at the major components, Apple still down here at 113. All right, if we look at a shorter time frame, at a 30-minute shorter time frame, it's almost, you know, unchanged. Its high was 132. And so we're about 40 points off of our all-time highs. So in all intents and purposes, if we look at pre-numbers, pre-splitting numbers, that would mean that we are trading somewhere at the 470-ish level, which would be somewhere down here. Okay, so it's a little bit hard to view on this graph because it really just, you know, takes away from some of the volatility of Apple. However, looking at Microsoft, it didn't bounce so much yesterday. Only $1 actually pushed up a little bit higher and then sold off. Looking at Facebook as well, didn't bounce so much, and looking at Amazon as well. did not break out so much. Okay, so just be aware of the fact that the tech stocks may actually start to recover maybe today to pick up, okay, as we go into this number. However, when we look at the bank stocks, okay, this is the traditional market stocks, we are making a wedge formation. We're looking here at JP Morgan, and you could see that it has this upper limit of 102, and it's still really trading with this ascending line. Okay, now it does need to break above 104, and if it does break above 104, I think we go up to the 111-ish level. Okay, but again, we are in a very, very choppy market, so just trade very conservatively, especially as we're going into tomorrow's number. This is Fred Razak. I want to wish everybody a great trading day. Thank you.